Qualified business income deductions after the One Big Beautiful Bill. That is the subject of today's ACTEC Trust and Estate Talk.
Welcome to ACTEC Trust and Estate Talk from the American College of Trust and Estate Counsel, a professional society of peer-elected trust and estate lawyers in the United States and around the globe. This series offers professionals best practice advice, insights, and commentary on subjects that affect our profession and clients. And now, our ACTEC Fellow host with today's topic.
This is ACTEC Fellow Travis Hayes of Naples, Florida. The Tax Cuts and Jobs Act of 2017 introduced a valuable tax break for owners of pass-through businesses. It allows eligible taxpayers to deduct up to 20% of their qualified business income, otherwise known as QBI, which significantly reduces the business owner's effective tax rate. ACTEC Fellow Steve Gorin of St. Louis, Missouri, will continue the ACTEC Trust and Estate Talks dive into the recently enacted One Big Beautiful Bill Act and provide an overview of the QBI deduction and how the new budget reconciliation law has changed it. Welcome, Steve.
Thank you, Travis. So this deduction has two limitations that the 2017 law put in. One of them is what we call the wage limitation. And the wage limitation limits the deduction to the greater of 50% of W-2 wages with respect to the qualified trade or business, or the sum of 25% of wages with respect to the business plus 25% of the unadjusted basis immediately after acquisition, which I abbreviate UBIA. For those people who are fans of the movie Die Hard, you can substitute UBIA for Yippee-ki-yay, but don't use the expletive afterwards. Okay, then the other limitation is if you have a specified service, trade, or business, then the law says that you can't take a deduction if you have those specified service, trade, or business. That includes the fields of health, law, accounting, etc. They pulled a whole list from Code Section 1202. The Code Section 1202 did list as a disqualifying business engineers and architects, but the 2017 tax law said, no, we're going to include them. So engineers and architects don't have that disallowance. And that's because we lawyers are evil people. We're doing Satan's work, whereas architects and engineers are doing God's work. They're good people. So that's why they get the full deduction. That's the only explanation I can have it from the 2017 law. So anyway, this wage limitation and the specified service, trade, or business disallowance do not apply if the taxable income is below certain thresholds. And the initial threshold that they had was $315,000 for married filing jointly and $157,500 for other taxpayers. And that was indexed for inflation so that in 2025, it's $394,600 for married filing jointly and $197,300 for other taxpayers. So anything below that range for taxable income, you get the full deduction without the wage limitation or the specified service, trade, or business disallowance. The 2017 law also added in a phase-in. So for married filing jointly, that phase-in was $100,000. So if your taxable income is below $394,600, then for 2025, you get the full deduction. If it's somewhere between $394,600 and $494,600 for married filing jointly, then you will have the wage limitation and the specified service, trade, or business disallowance phased in. And then when you would reach $494,600 for married filing jointly, then those limitations and disallowance apply with full force. And then likewise for other returns for 2025, the range is $197,300 to $247,300. So now the new tax law increased the range effective in 2026. Instead of being $100,000 range for married filing jointly, it's now going to be $150,000 range for married filing jointly. And instead of the $50,000 range for other returns, it's now going to be a $75,000 range for other returns. So let's say we adjusted for inflation and then did some rounding. So the $394,600 for married filing jointly would go up some in 2026. So let's just say it's going to be about $400,000. So the range for married filing jointly would be $400,000 to $550,000 compared to the 2025 range of $394,600 to $494,600. So you have a larger group of taxpayers that's going to be able to kind of benefit from that expanded range. And then similarly, for other taxpayers, the range for 2026 would be approximately $200,000 to $275,000 compared to the $197,300 to $247,300 for 2025. So that is the impact of the law. So here's a little quiz. How did the deduction change? Number one, increase the range for phase-in and limitations. Number two, encouraging watched replays of Die Hard. Number three, increase the percentage deduction. And number four, made accountants and lawyers angelic. Now, of course, if you answer number two and number four, then I certainly love that answer. Number one, of course, is the correct answer. Now, increase the percentage deduction. I say that because it actually did not increase the percentage deduction, but some earlier versions of the bill were going to increase it from 20% to 23%, and those did not change it. And I have just one more bonus for you that's slightly off topic. There's a deduction for pass-through entity tax on the state income tax where pass-through entities elect to pay it. And that deduction kind of evolved from 2020 through today. And there were some threats by the bill to possibly disallow that for various people, like evil businesses, just like us lawyers and accountants. And those limitations did not come in. So we have good news on that pass-through entity tax deduction, as well as a little bit of a break for the 20% QBI deduction. Thank you very much.
Thank you, Steve, for participating in the ACTEC Trust and Estate Talks podcast series on the One Big Beautiful Bill, and for educating us on its effect on the qualified business income deduction.
Thank you for listening to this episode of ACTEC Trust and Estate Talk, the podcast series about wealth planning matters from the American College of Trust and Estate Counsel. To find an ACTEC lawyer near you, visit actec.org. Please subscribe to this series and leave us a rating or a review.